to know how that affects things from a market structure standpoint. I do know that, there have been reports and people that believe very strongly that there is widespread manipulation of altcoin markets and that there's, wash trading and everything else going on in that platform. If you have a monitor in there that can look and see all that, that changes the dynamics. What does a bull market look like in crypto when one of the biggest spot exchanges in the world has effectively a regulator overlooking everyone's shoulder for 24/7 for 3 years? It might look very different than what we were familiar with in past cycles. And if your answer to that is, well, all of these individuals are just going to do this on other platforms, I would not be surprised, as we said earlier, that you're going to have similar enforcement actions filed against other platforms outside the United States, so long as they can get the jurisdictional hook of some individuals trading behind a VPN in the United States, and they know that to be the case. So that's a real key thing. But to your point, it's always a good time to take self-custody of your assets. The one final thing that Tone brought up is that I believe, this regulators move very slowly in some respects, and that's just part and parcel of how they function. And to Tone's point about stablecoins, I'm not, a Tether fudder. Okay, that's not the point of raising this subject. But I will just tell you that I think it again is naive to believe that there isn't going to be some enforcement action, at least at a minimum, or potentially worse, coming down the pike for some of these stablecoins. And this is just my experience, Jason, maybe you disagree, but everyone I have talked to in DC, every major policymaker that has had an off-the-record conversation about this with me has said the biggest concern that they have continues to be stables. Stables is, in their view, has systemic risk. I've heard people throw that phrase around. Stablecoins pose systemic risk, which I don't quite understand given the size of the stablecoin market relative to the U.S. economy. But I've heard that bandied about quite a bit, and I think Treasury is looking at it. They're trying to figure out how to deal with it, and do not be surprised that just because they haven't taken some action so far, that there isn't some action in the future. And again, anyone's guess from a market perspective. I'll defer to people like Tone as to what effect that would have. But that's a big issue that is coming down, and it will come, I think, in the next year or so.
So I just want to say real quick, I would love to have Tone. I think we should all vote for Tone to be the monitor. Like, I'll personally go to Treasury tomorrow. And I mean, what better guy than someone handing out Scammy Awards to be the 24/7 monitor? In all seriousness, and Josh, I saw you unmute, so I'll go to you next. But one thing to think about, Joe, is having me being the federal regulator here from the FDIC, is for the smaller and mid-sized banks and financial institutions, you go visit them once every year, once every 18 months, and you check in on what's going on, or you have a phone call once a month just to make sure everything's okay with bank management. But for banks like Bank of America, Citi, there is a full-time examiner who basically has a desk and sits in an office at Bank of America and is there 24/7. So I think this monitor will probably be a duplicate of what they already do with the large financial institutions, of just basically having an examiner watching over everything that's happening in Binance, 24/7. Josh? And then Terrence's question.
Thanks, Jason. So two things. One, just as to whether, in my view, the SEC's enforcement actions against digital asset trading platforms will have a negative effect on Bitcoin adoption. I think in a lot of people's minds, at least on the institutional side, there's a distinction between Bitcoin, which in many people's view, although certainly on this Twitter Spaces, it was mentioned that the SEC may still be keeping its options open about whether it later wants to determine that Bitcoin is a security. I think generally speaking, people are pretty comfortable that it's unlikely to be a security, right? And I do think that these actions against exchanges, while it certainly isn't good for PR for our industry, I don't know that it actually hampers Bitcoin adoption per se. I think there are a lot of things where people are quite excited. Again, not investment advice, but certainly people have their eyes out for the potential for the Bitcoin spot ETF to come into being within the next few months. And I think, that victory by Grayscale with respect to the SEC's actually being said to have acted arbitrarily and capriciously in denying its Bitcoin spot ETF application. I think that things like this actually point to there's just an excitement, and I think people are looking forward to this. And I don't think that I think that the potential excitement around that for Bitcoin is greater than the impact that an SEC v Kraken case would have going the other way. I do think with respect to stablecoins, I agree very much with what Joe said. Certainly, regulators, whether it's Michael Hsu at the OCC or otherwise, have been saying for a long time that digital assets, stablecoins, in particular, Tether's often singled out, pose systemic risk and that they could lead to the next financial crisis. I think one of the reasons for that was given by Michael Hsu is, pointing to Tethers being largely backed, at least at certain points, by commercial paper, right? Which is not as liquid as just one-to-one, say, with fiat. And you may have seen that earlier this month, U.S. lawmakers had introduced a bill, I believe on or about like November 8th or so, barring federal government officials from doing business with certain China-based blockchain firms. Now, interestingly, that bill would explicitly block U.S. government officials from transacting with iFinex, which is the parent company of Tether. So obviously Tether issues USDT. You can read more about this, obviously, in lots of articles, including by CoinDesk. But again, to me, this all goes back to the national security concerns. And I think it wouldn't surprise me if at some point there is some kind of enforcement that relates to Tether and or other digital asset stablecoins.
Great. Thank you, Josh. Okay, Terrence, you'll have the last word with a question, then we're going to close down the space. Go ahead, Terrence.
With a question. Joe, do you think it's possible that with a Hamas attack on Israelis that the systemic risk people are throwing around is now around terrorist financing, and that they see Tether as something that is hard to censor and hard to confiscate, so basically decentralized, and maybe that's why they are so focused on Binance and Tether? We saw Lummis, for example, ask the DOJ to just make a decision on Binance and Tether. They've obviously done that on Binance.
Yeah, I think that's definitely a factor, but there's many factors here, right? The bigger concern is, I think, what is backing these things, what is behind it, and where is the paper coming from, who's holding the paper, who's the custodian. You've got issues with money laundering that are potentially implemented there. I mean, if you have a token that is trading on U.S.-based exchanges like Coinbase and can be swapped for USD in US banking accounts, and that token's underlying is maintained and operated by an offshore entity where you don't know what's behind the token, and it could very easily be laundering money for a variety of bad actors. You can see why that would present systemic risk. So that, in addition to everything that Josh said, I think you've got a lot of issues. Okay, and even if it's, and I'm not one of these people where I believe that Tether is totally unbacked and it's just made up and printed out of thin air. I actually think that's not the case. I think the far more likely scenario, the why they've resisted audits and they've resisted efforts to have an open.
Hey, Joe, can I just say something real quick? Sorry, it's really my last comment because Joshua said it as well, and now you just said it. So recently, I actually spent time talking to a person that was one of the co-founders of Tether, and he said something very specific that was interesting. So Tether was never backed by the US dollar. They've never claimed that it's backed by the US dollar. So he made it very specific. Tether's language has always been that one Tether is redeemable for $1 US. So there was never any paperwork that there was a direct backing. So how they're holding the dollars? That's what the person said. Okay, yeah, I'm just relaying the information.
No. So let me just make sure we're not talking past each other. So I agree that the paperwork, the representation of the company, are not that they're backed one for one with dollars. Right. I think that they're supposed to represent, and I call it theoretically pegged coins, right? They're theoretically pegged to the dollar. The question is, what is used to create that peg? And we know based on the New York AG settlement and the composition of their balance sheet as of that settlement, that they did have some treasuries and they did have some cash or cash equivalents. And they also had commercial paper, right? So they had a variety of things they used to try to maintain the peg.
Right. But Joe, but again, you're referring to the peg is like borderline implied by, and again, this was new to me as well, in that, look, all Tether does is it allows a person that holds Tether, not a person, but an institution or like probably like a really wealthy person, to redeem one Tether for $1. So there was never, a direct backing. The fact that Tether happens to be worth $1 is just happens in a natural marketplace. And all Tether ever admitted to was you can redeem your Tether for $1, but there was never an official, this is a peg, this is a backing. They, according to them, they never claimed any of those things.
Yeah.
What they claimed was you can redeem your Tether for $1 of US dollars.
That's fine.
And Joe,
That's
could
fine.
just real quick, I guess the question that comes from that, from what Tone's saying, and then you have the mic, is this: let's say let's say I was running Tether. If I had a bunch of gold bars in my basement, and I'm saying you can redeem it for $1. Every time there's redemptions, I just go sell my gold bars. Like, is that okay? Also in this, is that what we're saying? It doesn't matter what's actually held.
Well, it doesn't. In many respects, it's a functional distinction that is insignificant, because if you to the bigger concern for U.S. regulators, I think, exactly as they shown in the Binance case, is money laundering, right? If you establish your peg that permits the vehicle to be able to be redeemed for a U.S. dollar by holding assets that are effectively laundered assets, who cares? Who cares if it's solvent and it's fully backed or by something, if backed by gold, Bitcoin, whatever, it doesn't matter. The fact is that you're taking money from a source. Who knows if you're conducting proper AML, KYC from that source, and it's not some terrorist organization or some bad actor or some person that's from a sanctioned country. You don't know. And you're facilitating that transaction by then allowing the token, which again is supposedly redeemable for $1, to be the mechanism with which someone can clean or launder their money. That's the problem.
And may I just jump in with something about the commercial paper point, just as it relates to systemic risk? So commercial, it's like short-term debt with maturities of not exceeding like 270 days, right? It's unsecured promissory notes. But the thing is, while holding aside whether you can actually redeem one Tether for $1, part of the concerns of regulators, including the OCC, is that at least at certain periods of time, I'm not sure what it is right now, but the holdings of commercial paper by Tether, it was estimated to be larger than those of most prime money market funds in the US and the Europe, Middle East, and Africa. So if there were a sudden mass redemption of USDT, the idea is that it could affect the stability of short-term credit markets if it was happening during a period of wider selling pressure in the commercial paper market.
Also, Tone, real quick, the claim that Tether's never promised to hold dollars for every Tether is not true. They absolutely did claim that. Just read the AG suit, which, if they're making any public statements that they've never claimed that, is quite interesting because they agreed to never contest the facts in that settlement. But they did in the past claim to always hold dollars for every Tether. They don't claim that now, but they did.
Yeah. And thanks, Aaron. Thanks for jumping up. And again, we're closing this out. And look, I think we all need to sing Kumbaya, because at the end of the day, guys and gals, remember, it's backed by the US dollar. And that gives me a lot of comfort because the dollar's backed by the Federal Reserve. So we're all safe. We're all safe. It's all okay. All right. Look, Tone, thanks again. Unconfiscatable, awesome. I've had them up. I've talked about it throughout this whole thing. I'd love to reinvigorate the law show. I think unconfiscatable, that notion. I knew last year when I heard about the conference and I came, Tone, this was a really important concept. And I believe it's even more so going to come more and more relevant year after year, because the idea of how you hold your Bitcoin, how you hold your crypto, whatever that looks like, and understanding this uncensorable but also unconfiscatable world that is likely going to be challenged by the powers that be, as I think we saw yesterday. That was like the opening shot of saying we need control over these exchanges, which can lead to the opposite of unconfiscatable. So, Joe, Josh, thanks. Day before Thanksgiving, I know we all got to run to our families and friends. So everybody have a nice Thanksgiving. Joe and Josh, thanks for being so generous with your time. As a reminder, the space is recorded, so if you miss something, we can go back to it. So again, thank you all so much for being my guests and having what was just a wonderful conversation. And happy Thanksgiving, everybody. Thanks a lot.
Happy Thanksgiving, Jason. Thanks, Josh.
Thanks, Jason. Thanks for
Thank
the
you.
shout out. See you at the
You got it.
conference.